Hi, Ron. Hope you are well. It's Monday. We are starting the second half of January. It's week 3 of January, week 3 of 2026. Davos World Economic Forum is kicking off today. And obviously, the main news over the weekend was President Trump's announcement of additional tariffs on 8 countries in the EU, or sorry, not in the EU, in Europe, because UK is included as well. That sort of standing up to him about his crazy demand to take over, that the US takes over the island of Greenland. So anyway, that's still got some legs to run. But crazy world, new world order completely turned on its head, or we're in a new world order as we speak. So I've got oil on here for. We were short this on Friday night. It's just hit target 1. I think we got 50 points here on WTI, and we got is the energies and Brent. I think we got 30. Anyway, it was T1 was here. It was just. I mean, we've been really lucky with this one. It's just touched. Let me just show you the short time frame. We've just about. This is. Sorry, let me make myself a bit smaller. This is Brent, the global benchmark in the oil business. We just literally spiked into our target area at 63.35 from our entry at 63.75 on Friday night, and it's reversed back to entry now. So that second half of the position is close. We pulled the stop loss down, so there was only 15 point gain on that one, but it's reversed since this morning on Brent. WTI is not quite there. We are. There's our entry on WTI. It's higher, and so I might have marked that on wrong. I can't remember, but anyway, it was basically on Friday's close. It's not on this platform. Mohammed, good afternoon, my friend. Anything you want to look at, let me know. I'm just going to run through the main items today, and there are some trades I posted on. I think I actually posted them last night, Sunday night. But on Friday night, I'd closed. I was short the oil complexes, both WTI and Brent. They both hit target 1. Brent has reversed to entry. WTI less so. It's moved further, WTI, interestingly. But that's still open, and the stop loss now is at entry. So that was 58 cent we have. On the negative side, though, we had a big loss on the Dow. We went short the Dow on close on Friday as well. We got in at 49,365. Our stop loss was up here at 49,600. Stop loss was down here. I was obviously tweaking after this is Friday night. Obviously, Trump tweeted Truth Social, whatever he calls it, about the European. And I'm laughing because it's just, I can't believe we're living through this. It's just farcical. Apparently he sent a letter to the Prime Minister of Norway, basically bleating on, saying, because your country didn't give me the Nobel Peace Prize, despite I've fixed 7 or 8 wars in the world. Blah 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 blah. You're getting extra tariffs because you're standing in my way about taking over Greenland, a sovereign land, and it's been Danish for centuries. The Greenlanders not getting any say in this at all. But anyway, that was stopped out. But I actually got out ahead of the stop loss is a bit lower. I was up early. I was fretting. I was actually fretting about it. You always said, never. If you've got too much risk, or if you're fretting about a trade in the night or in the morning, you've got too much risk. But it was just the fact I'd taken it late on Friday night. Anyway, it was a stop out. We lost 386 points. It wasn't as bad as it could have been. It's 1.5%, but that's quite a big hit to start the week. But anyway, that was a loser. The other trade we took on Friday night was the short Aussie Kiwi, and that's actually hit target 1. I think it was only 30 pips. It was 30 pips either way. So it was one of those stop loss wasn't there. Definitely wasn't. It was 30 pips either way. I remember posting it. I've marked it wrong on there. So if you look at I'll put on our Discord group. We'll get to today in a minute. So trade chat, and here we are. So this is the Dow. There's the stop loss we put. I didn't actually put the numbers in for the oil markets or Aussie, but as I say, I was looking for only 30 pips on the Aussie Kiwi with a tight stop loss as well. So I've obviously marked that wrong on there. But that's another 15 pips in the bag. But obviously still got 386 points the way I report this. So that was target one was hit this morning. Again, that's retraced, but it's still nicely in a downtrend. The Aussies, the Kiwis at the best of the currencies this morning on the majors. The yen's been hit. More chat. There's an announcement of the election for 8th of February in Japan. The lower house of the parliament will have an election. So Takamichi, she's looking for a mandate for herself. So anyway, more on the yen in a minute. But that's it. Target one, and the stop loss. I might be moving it, and it's up there. But anyway, the stop loss now on this will have ultimately moved to the entry. So we can't lose on this second half of the trade. In fact, I'll pull it down there because that's been gapped on open to the downside. So it's only the hourly chart. That obviously this is a daily trade, so it's a set and forget type trade. There you can see it's much tighter on the daily time frame, but stop loss below the entry now. So again, second half of that can't lose. As you can see there on the daily, may find some support at the 20-day moving average. Okay, so that's a winner. Two winners for the oil markets and a big loser for the Dow from trades. That's the only skin in the game I have at the moment. Mohammed, I don't know if you're trading currently or what you trade, but let me know if I can help you. I'll help you. If not, thanks for being here anyway. The first day of the World Economic Forum has been not put on the back burner, but basically it's all about what Trump is going to say on Wednesday. He's due to in Switzerland on Wednesday at Davos, up in the mountains. The great, the good, and the not so great, and the not so good. All leaders of finance, you'd be there and being seen. So all the leaders of the major banks in the world will be there. Major political leaders around there. Apparently, there are some gaps in Trump's diary in Davos. So whether he's going to, see some of these European leaders. Because it will be the end of NATO, but he's going to say, "Who cares? I'm more interested in the Western alliance. China can look after the eastern part of the world, but as long as they're not treading on anybody's toes." But how the Russians and the Chinese are going to take this action on Greenland, who knows? The two key major flashpoints in the world are not on the agenda anymore: Israel and Hamas. And unfortunately, Russia and Ukraine. Last comments Trump had about the Russian-Ukraine war was the invasion was that Zelensky was holding things up. Unbelievable. But anyway, more on that as we go through the week, no doubt, and moved markets. So that move by Trump over the weekend has caused a big move. So risk off and Bitcoin got hammered. We were over 95,000 last week, as I'm sure you're all aware. We're following me. We held it quite nicely over the most of the weekend. So there was Friday's close quite nicely. Obviously, we come down Thursday. Friday we held it. Saturday, Sunday we were actually closed up and holding over 95. But this morning, when the big volumes came back, the big traders came back, we were down. And interestingly, we went into test 92,000, but we've clawed back up there. We're back to 93,000 now. So clearly, I would read into that some buyers at 92,000, which has always been my bit of a pivot area, a bit of a key break area. So we were long here last week. We remain on the. I don't share this with you, but I'm still long. I've held all my positions despite today's sell-off that we took on the break of 92,000. And I actually added as we went over 95,000. Last week as well. So that bit's out of the money. This is still sort of out. In fact, this is out of the money currently, the entry we took here on the 13th. But anyway, 92 is key. We see where we go from here. It could easily turn around quite quickly. Obviously, the other thing that's, let's just run through the energy we looked at. Forex, so the dollar's weak. We've got, actually, let's just skip ahead. Let's go to the dollar CAD because we've got Canadian inflation coming at the moment, and this rally for the dollar against the loonie has stalled all of last beginning of the week before and all of last week around this 138.80 resistance area, which we identified a while ago, didn't we? As we come down, let's see these dots that we put in. Let's check these out now, can't we? Get rid of that. So this is our a zone, the 138.80 zone, and that's where we're stalling at the moment. So we got CAD data. This is the only major data we've got today. If I just bring in the calendar, remember, those of you with accounts, if you've got high impact events, if you've got an account that's susceptible to this, you can't open any new positions within 5 minutes of the data coming out. So 13:25, and then 5 minutes thereafter. So 13:35 if you're trading the Canadian crosses on this. Oil is related to CAD quite significantly as well. So CAD trades will be liable for that as well. So just be aware of that. So expectations. Remember, the Canadians, a bit like the Aussies, they produce three readings: the median, the trimmed, and the common. The median and the trimmed are the most important ones, and then it gives you an average for the country. But the median is the one that we are looking at. So all you can see here, we're looking for a bit of a dip. We've had some mixed data out of Canada over the last month or so. So let's have a look what this looks like. If you just have a quick look at the graph of Canadian inflation, it sort of peaked over 3% for most of the summer last year, and we've came down in the final quarter of last year. So we are expected for the December the December reading did come in at 2.8%. So we're looking for another tick down, but will we get back to these levels of the autumn of 2024? We'll see. Remember, the Bank of Canada first to move into QE and first to move out of QE as well. So key inflation data for the Canadian loonie coming. Well, I'll just leave this on now for the next few seconds as this data ticks through. So that's about to drop. I'm saying I'll leave it on. We'll come back to that. So if we look at so we've been down today so far. You see the daily candle. The hourly candle is trending low quite nicely, and here it's looking to go long, isn't it? We haven't touched the outside of the Bollinger Band, so there's some more downside down the hourly chart. Let's go back to the scalping time frame. So that's been short there. Target 1, target 2. Look to go long, hasn't worked out. Still continued lower here at 1 o'clock ahead of the data coming out. The data's dropping now. We're looking for a cross here on the stochastics, the K and the D line. Remember, we've got our stochastic set at 10, 6, and 3. Standard setting for the Bollinger Bands. We need a touch of the outside of either the upper or the lower Bollinger Band, and then a cross on the K and the D line to take this in the opposite direction. A mean reverting strategy, this. Obviously, it works when the market is in a channel, but when we've got a trend on, be careful. We look to add as a continuation trade. But you can see the trend, even on this 5-minute time frame, I'll zoom right in to opening trades this morning, is down. The dollar's weaker, gapped on open, retraced a wee bit, but we've gone lower and rumped out. So our low for the European session was here at 138.84, and we've just gone lower now as the data has dropped, and we've been as low as 138.78. So we are looking to now take this as a long position. So let's just fade the news potentially, but let's see how it goes. So the system that triggers, when I code it, it will trade automatically. It will have automatically taken a long position on the completion of this candle if indeed it actually finishes this way here on the 5-minute time frame. We got down to it works quite well on a 2-minute time frame as well. It's a bit more choppy, obviously, but you can see here the 2-minute time frame would have taken there. So the 2-minute time frame would have taken there at 13:26. That would have been long. Target 1's been hit, and target 2 is the outside of the Bollinger Band. Same setup, just a shorter time frame. So obviously, normally we trade on the 5-minute time frame, but let's do the 2-minute as when we're live. So that would have been a long position. However, the risk would be the stop loss would have probably been just below the bottom of the Bollinger Band. So the data, this is the issue with trading into the news, the volatility of the data, we'll have a look at what it looks like, would have stopped us out. We'd have been taken out on that move. However, because of the positivity of the a continuation trade up to the stochastics, the close of the candle would have meant we would have re-entered here. So we'd have been filled where we are now, basically 138.85. So that would have been, so we'd had a first one that lost, and then a second one we would have got long again there with the stop loss, because it's a 2-minute one initially at the bottom of that candle, 2 candles back, and we'll see where we are. So that's our entry. That would have been, that's the stop loss here on the 2-minute time frame. Obviously it's more volatile, so you've got to be careful. But the trend, as you can see, the stochastics are still moving up, but there could be a bit of a resistance here where we got to last time at 59.60 on the stochastic. So watch that moving as well. But as you can see, it's very much against the trend because we are down for the day as well. So let's see where if this actually plays out. As far as we'll just leave that there for the moment. Let's just have a look at what the what the data looks like. So we were in now. Let me just refresh this. So Canadian data coming weaker than expected. So quite significantly weak. The median's gone down to 2.5%. That's quite a significant decline. However, the trimmed, which is literally what it says, a trimmed version of the median, was revised higher for last time to 2.9%. It's an annualized number, and 2.7% in line. And the common is also in line. So we add these up, divide them by 3 to give an average for when people ask about what's the Canadian inflation rate, it'll be coming out at sort of 2 points. Again, it's weighted more to these two than this one, so it's more like 2.7 something point. It won't be to 1 decimal place, it's 2 or 3 decimal places. So it's coming better than expected. It's biased to the downside, if you like. Monthly basis is coming better than expected as well. Negative, so disinflation, if you like, or and that's what a lot of countries are worried about where these Chinese goods, particularly that are, not making it to the US, the excess capacity. Remember, they had a massive trade surplus again, and Europe in particular worrying about, and Latin America and African countries worrying about goods being dumped by the Chinese. But anyway. Again, it's the same story, really, that inflation, I mean, it's still, it's closer to 3% than 2%, obviously. So it's not gone down. It's gone down, but it's still not gone away. So the prices are still going up for the average Canadian, as they are for the average global citizen, aren't they? And central banks want them around 2%, apart from some countries like Japan and China. But the big developed economies, Canada being one of them, obviously huge fuel oil supplier, producer, huge financial services sector as well, Canadians. Still quite sticky. This 2.7, 2.8 level, but 2.5 for the median. That's good news. So I would have expected, to be honest, dollar CAD being so weak, I would have expected that to have moved perhaps more than it did to the upside, to be honest. But clearly, that isn't what the brains in the marketing are thinking. So I'd move my stop loss up now to the bottom of that wick, this 2-minute candle. So it's not really moved on that, but that we're still. Let's move that down. Leave it just about there, because this is still ruining positive, but we're not above our entry price, are we? So that's here on this 2-minute chart. We're just about edged into the top half of the bottom, like we did there, but it's continued to come down. So this isn't looking great. I tell you what, I'm going to pull that stop loss up to the bottom of that last. Actually, it's too close. It's only a 2-minute one, isn't it? So yeah, let's leave it around about mid of those candles there. To the upside. So dollar might, the Canadian has improved, but elsewhere dollar's been weak this morning. I'll just go through them in order here. So the Swiss franc obviously got safe haven bid on the weakness of the dollar and general risk off moves this morning. Let me take this up to the hourly chart. So again, another big gap on open this morning. And the key thing for the Swissy is we are back under the key .80 level. So we are low for the day, perhaps low for not the week actually. That was the 14th earlier last week when we were down here at 79.75. So 79.75, big 5 round number, and into this cluster zone here. The low of this little group here took us to, and this was, when was this? This was the 12th of January, a couple of days before, took us to 79.60. So 79.60 is the next down leg potentially for the Swiss franc if we break below where we are now, 79.75, and then 79.60 downside target for dollar Swiss. Dollar yen, as I said earlier, has been impacted by the announcement from the new prime minister in Japan, Mr. Takemichi, that there will be a election. She's been telegraphing really on the 8th of February. I think Parliament gets disbanded in Japan this Friday, the 23rd. I think I read this morning. And she's promising a reduction on the sale tax, which is very popular, or had been, again, has been seen to be very popular with the electorate in Japan. She's talking about, big fiscal stimulus to get the economy going. But many prime ministers before her over the last 30 or 40 years have tried that in Japan. It hasn't worked out. Most notably, poor old Prime Minister Abe. On his 7 arrows of economic development. Was it 7? Was it 4? It's 4, wasn't it? 4 hours of economic development. But anyway, the yen remains very weak. We're at 157.92 today, so we're back under 158. But yen still very much on the back foot. Obviously, it's dollar weakness today here on the hourly chart, as you can see. But so last week we got to a 159.40 zone, wasn't it? We've been giving up since then, but again, just like every other currency, and this is against the weak yen as well. Remember, dollar gapped low this morning, and we've been as low as 157.40, where our previous stop loss was on some trade from the 8th of January. So that hasn't really broken the upward trend for the weakness in the yen, the strength of the dollar against the yen. We're still above the 20-day moving average at 157. But we're coming back down. Bigger move for the euro against the dollar this morning, 116.34 now. Big update, big engulfing update at the moment from Thursdays and Fridays. Decline, hugging the bottom of this Bollinger Band. The strength in the dollar was continuing, but it's the most significant update currently since this decline started for euro dollar. So 116.35. I know there was an analyst on, can't remember, I think it was Paribas, who's from BNP Paribas on Bloomberg, I was listening to this morning. Very astute or intellectual, astute young man, talking about their target for the year of 120 for the euro from BNP Paribas. So euro back up 116.34, big engulfing candle at the moment. So this might be the move higher that many have been waiting for. So back over 116.35. So dollar weak across the board. Aussie 67 has been breached again this morning. The big support at 66. Here we've been sideways for a while all week, but we're back over 67. A couple of weeks ago we went to 67.60. Where was that? 67.60. So again, another relatively positive candle. And we are engulfing candle last sideways session. So hold of 67, and we're back over 67. So it seems to be relatively positive there. There's a big old channel forming for the Aussie there. Sterling 134.13. So again, it's like the euro, it stymied its decline. Big speech this morning in London from the Prime Minister Keir Starmer. Fudging his words to a bit, really. Going on about the special relationship between the US and the UK, but you still need to stand up to your allies. Blah 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 blah. Basically, Donald, you are wrong about trying to take Greenland. You were wrong, certainly trying to take it by force. but tempered somewhat. What more can he do? He's outside of the EU now, so he's speaking as an individual country with not the sway it once had a long time ago, and certainly not the sway it had part of the big EU bloc. EU got bigger axe to grind and a bigger hammer to hit back to the Americans as the Chinese did in negotiations last month. So we'll see. Obviously, these guys are going to be meeting face to face this week. So key event up in the mountain in the Alps in Switzerland. Sterling 134.20 today. And finally, Kiwi, a really strong performer today. Kiwi, big bounce for the Kiwi, more so than the Aussie dollar. Aussie Kiwi yen, I think, was the biggest mover today because we've got this weakness in the yen, strength in the Kiwi. Strong day. Not only engulfing but pushing through the 20-day moving average at the moment. So watch that tomorrow. I may be looking for a long position for some more Kiwi crosses tonight. So do watch that. So again, sideways, but it may be the leading currency. Kiwi and Swissy doing the best against the dollar. And just while we're talking about the best performance, we'll look at Kiwi yen because that is it moved nearly 1% today. But just look at that as an example of how you trade currencies. You've got a strong currency, a weak currency. It's only going to go in one direction. That's the trend today. So again, not exaggerated too much here on the daily trend, but it's with the trend, and it's the biggest mover. It certainly was the last time I looked this morning to the upside. So there you can see there's the move down on, interestingly, down on Friday night. And what a rally we've had. The combination of the impending election in Japan, probably going her way, probably adding to the fiscal stimulus, so adding to the weakness of the yen. The higher interest rates in New Zealand are appealing to speculators and punters, and off we gone. We've had a really strong day today to the upside and into a previous stop loss level we had on here from the 12th of, whenever it was, the 12th of last week, a week or so ago, the 12th of January. So there we are. I can't remember. Anyway, that's a strong old move to the upside, our biggest moving pair. The big news, as we said, is everyone's favourite trading elements that gold and silver hit new all-time highs again today. And hi guys, Jan, hi, hope you're well. Anything you want to look at, guys, stick it in this box here. I'm happy to look at it. I guess gold is one of yours, and perhaps even Bitcoin as well. But here you can see it on the hourly time frame, sideways action. We've been talking about for yonks, haven't we? Still in a bit of a sideways even on higher time frames, but a gap on open last night in Sunday trading, and we pushed immediately to new all-time highs here at 4,690. Silver did exactly the same thing. Copper as well. The metals, particularly the precious metal, now the base metals are following. Copper's all-time highs. Platinum, palladium, all leaping higher, and 93.35 on silver, and gold 4,666. The sign of the devil, shall we say? Enough said. So gold lifting up. Trump threatens Europe tariffs over Greenland. Before that was obviously the rattling over Iran. Again, the Iranian situation continues. My son-in-law, unfortunately, has family in Tehran, and obviously it's very personal to us. Very, very sad situation, but people not getting the information they deserve certainly within Tehran and the wider, bigger cities in Iran, and the regime clamping down really viciously. Trump said he was on his way. He was coming to help. The Fifth Fleet, the US Fifth Fleet, based out of Bahrain, was out and manoeuvring. So that is far from over as well. So, but it's just fallen off Trump's radar for now after the Iranians didn't execute those guys last Wednesday. So. And so we had that move in the oil markets, but anyway, it's we live in a very fragile world, and Trump's move on Greenland just seems crazy, given the world we live in. There's more important things to be spending his time on what I would argue. But anyway, up we go. Gold bid new all-time highs. As I've said many, many times in this rally to the upside, be very, very careful trying to short this rally. There's lots of fundamental structural changes in the gold market that's led to this big move up. None more so than the worry about the debts around the world and central bank and government building and some of the the Russians, the Chinese, all building stakes with real hard bullion. And so another strong day today for the gold and precious metal and even the base metal markets, as I said. So the panic, the sell-off, the big sell-off we had at the end of the year has been bought back and we've gone higher since. So the rally is very much on. The 20-day moving average was last tested back here at the middle of November. We were under it for a while, the end of October, the first week of November, but the rest of it has been, again, that was a leg lower. It's completed. We've moved higher from that. And there's that extension that we put in, that we put together here at the beginning of the new year. This last little fib move down on this big move down we had over that 2 or 3 day level, and the extended fib level takes us to 4,700 was our upside target, wasn't it? And that's getting ever closer to the upside. So gold, silver remain bid, precious metals remain bid, and there we go. So as I showed you the Dow, didn't I? We got in, we got stopped out, or got out before the stop loss was hit this morning. So I would say that was 386 points. It was up 1% and a 0.175, I think it was. I'll put the results up later, but yeah. So and we're still back down there again now. So you can see that on the daily, gapping at open. I should have, stayed up a bit an hours later. I thought, stop loss is fine. It wasn't, as it transpired. But certainly 6 o'clock this morning, I was up, and 7 o'clock we were out. And I think the stop loss was actually lower than this. But anyway, that's been hit. That's out. That's closed. But you can see across the board, stocks are down. The DAX here in Europe, similar pattern, big gap on open. Went lower in the European session. We've pushed as low as 24,900 this morning. We've recovered a tad into the US Open. US Open is still 40 minutes away. The great and the good, I say, are all heading to the Swiss Alps in Davos this week. Let's just, unless somebody wants to look at another market, guys, if I just bring up the, where's my calendar gone? Here we are, Forex Factory. So all the speeches you'll see this week, all of them from the big players, are all coming from Davos. So tomorrow we have jobs and earnings numbers out of the UK. First thing tomorrow morning, 7 o'clock. Bailey is in Davos tomorrow. That's the Bank of England Governor Andrew Bailey speaks, and as well as the head of the Swiss National Bank, also on a panel, different panel later on in the day. So Bailey's on in the morning, Schengel's on later on in the day. Wednesday is the key day. The man himself, President Trump, speaks, clearly blowing his own trumpet, due to speak at the World Economic Forum in Davos, 1:30 Wednesday. We'll be live for that. As Miss Lagarde is on 2 panels. She's got 2 bites of the cherry on Wednesday. We got inflation out of the UK on Wednesday as well. 22nd. Key data for me is the core PCE. Key data also for the Fed is the core PCE numbers. We got weekly claims as well on Thursday. Jobs out of Australia as well earlier on in the session. And then on Friday, the weakening yen, as we see the Bank of Japan, are they going to rate? They're not moving rates now up. They're not with an election looming. So that's a bit of a non-event. So will we see in the benchmark of the Bank of Japan either after the meeting, before the meeting, as the election gets into election process gets running in Japan next week? Lots to see. And then as we are at the end, towards the end of the month, we've now got the first reading of manufacturing and services PMIs to come as well. So Friday's a busy day as well with European services and manufacturing PMIs. Remember, I say this every month, they are forward-looking. That's why they're important. Manufacturing remains more or less moribund around the world, in contraction in many, many countries. just edging out the 50. Remember, 50 is expansion, so just there. The French just up, the Germans still negative for manufacturing. UK still just about flat, completely flat, just into the expansion zone. So it's it's a problem around the world, manufacturing, and obviously with Trump trying to repatriate a lot of jobs for manufacturing. We'll see actually how it all pans out. US data later on in the day doing better than some other places, but not as well as he tries to tell everyone they're doing. And then a second reading for consumer sentiment and inflation expectations from the University of Michigan Business School in Chicago. So lots going on this week. Keep your eyes open, and comments from bank leaders, other influencers from Davos, as well as all the central bank leaders as well. So I'll leave you now with the news that Canadian inflation has cooled. The key median has come to 2.5%. Bit better than expected. With good news for Canadians. Obviously, prices not going up as much as expected, but still going up. And I'll leave you with the Canadian dollar, USD, CAD, USD, CAD. Go back to that 2-minute time frame. Now we've how that's finished. Trend down. We went long, didn't we, on the short 2-minute? I think, didn't we? Oh, we were short. I can't remember. Yeah, we were long. What did we get in? We got in here. There. No, it's been stopped out, hasn't it? So that's a losing position down our 2-minute. We got in at 138.84, or we would have done, and we were out at 138.82. So 2 points off that on that short time frame. So the trend, the 2-minute trend, remember it's a 2-minute we were trading on, has succumbed to the higher time frame. So again, you can see the trend remains to the downside. So watch the next down levels, that bottom of the Bollinger Band now, there on that 2-minute, 138.81. It would be a downside target from that break of the Bollinger Band there. And anyway, we got out there. Interestingly, we wouldn't have, that's crossed then. So yeah, I'd have got out on that candle there. So I wouldn't have, the stop loss wouldn't have gone there. The stop loss would have been, we'd have been stopped out there, because that's the then to close this up, because we've crossed in the overbought area. So the system would have, the loss would have been a lot less. So we got in here. Let's zoom that up a bit. We'd have got in here on this 2-minute time frame because it was looking positive post the news, but we got caught at the top. Shit happens. And we were being out here, but not there, because something this up. Not here, because we'd have moved that. We'd have waited for that cross to happen, and it wouldn't have happened until the conclusion. Although it's probably the next 2-minute candle we'd have got. Anyway, it's a losing trade, and it's not short because we didn't touch the outside of the Bollinger Band here on the 5-minute. So anyway, there we go. Take care, everyone. I'll see you tomorrow, same time. We got, as I say, we got lots and lots of data of chat and opinion. It can move markets, so be very careful. Wednesday is going to be critical, and obviously he tends to have a little press conference on the plane over, doesn't he, with all his sycophantic journalists that are stood next to him. But anyway, watch the Trump Meister this week, my friends. Take care, be good. I will see you tomorrow. All the very best, everyone. Bye-bye.